All right, happy Friday, Rhinos. Don't you love Friday? I gotta tell you, I don't actually know when Friday is. I was told today's Friday, but every day of the week just means something to the next day. And it's not like Rhino's a Monday to Friday, operation. The market is Monday to Friday, so I'm quite conscious that today's Friday for that, but tomorrow I'll be here. I know V will be hosting tomorrow. Sunday, though, I think I had to compromise that in having my wife marry me. I think it was very unspoken because she would never say anything about work life. But she would say something to the effect of Sundays, I really imagined my life with my husband and my children, going to church and then grocery shopping, watching some football, cooking, cuddling on the couch, watching some TV. That person I'd marry, I don't think I would sacrifice that. And then to me, I'm like, I think she just hip swayed me. I think she just said, buddy, Sundays are for family, which I'm totally cool with, right? So I know today's Friday, and let's do it. So let's see, who do we have in here? We have a good group already. Love it. We got all the all-stars. I love that. Let me take a sip of water. I'm a little dry mouth today. To go ahead and share why. So yesterday I spent all day doing creatives, right? So this isn't Rhino Wealth, this is Rhino. We have a search engine that's launching in likely a month, and we're going to have a whole campaign behind that. And it's quite simplistic, right? Like we could get into a whole nuts and bolts and blah, blah, blah. But at the end of the day, our goal is to put the proposition and option, the choice in front of someone, as simple as if you'd like to go ahead and search big businesses, use a Wall Street search engine. If you'd like to go ahead and search small businesses, use Rhino Street search engine. And if we can successfully message that in such a way that the average person sees a one or the other choice, then that's huge. There's like 10 billion searches a day. If we could go ahead and if we get the messaging down properly enough that 1 out of 2 people will say, okay, yeah, I'll do that. Or at least the average person could say, oh, that seems like a one or other choice. Well, I'm looking to book a cruise, so I'll go for a big company. Oh, I'm looking to, buy a t-shirt. I'll go with a small company. And it's funny because that doesn't exist. And it's because no one ever valued small business, because small business means nothing to anyone's bottom line. But the way we've built the company is that the small businesses in aggregate are more valuable than any one particular person ever could be to a multiple of like a bazillion. So the point of the story is I was doing that all yesterday, and it's funny, I'm letting you into a little bit of Rhino, right? I have a process for that, in which case I'm very nootropic sensitive. So I have a prescription for Modafinil. And Modafinil is, it's prescribed for narcolepsy, but it also has off-label uses for allowing your brain to work quicker, right? It improves the executive functions of your brain at the expense of the social parts, which is why I just took my daily, let's do this a couple of minutes ago. So by the end of this call, I might sound a little either way too executive or kind of like blah, 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 right? But it allows me to sit in a room and just see it. And I don't know if that makes sense to you, but a lot of what Rhino does and a lot of what every large company ever does is it has a visionary that sits at the top, and in their time where they have solace and silence, they're able to expand their mind and just see it. And that doesn't make sense to someone that's never seen it, but it does make sense to someone that understands what that means. Like Steve Jobs, to talk about Apple, when he created the iPhone, do you think it's because he had a research team? Do you think it's because he's like, okay, guys, whoa, what's out there that we need to create? What do people like? In fact, someone on the call, and I remember this like it was yesterday for the earnings call. Hey, Mr. Jobs, you have no money in your R&D department. How can you expect to run a company and be so successful if you don't put any money into R&D? And Mr. Jobs said, hey, listen, people don't know what they want, but they know it when they see it. And that's my job, to create something for them. And then he created the iPhone, right? Because there was no research team ever that was going to be like, well, according to our surveys, people want to touch a screen, but they don't know what a touch screen is because they never had a touch screen, but they just decided that they want to touch a screen. Such a percentage of them did it. And it's amazing no one ever built it. So here's this research. Like, that can't happen. There was no research team when the first car came out. There was no research team when the first plane came out. There was no research team when the first fill in the blank came out. It was someone that was a visionary that just saw it. And I was doing that yesterday, and I'm going to be spending time doing that again today. It's not really another point of all that, but I want to share that with you. That being said, let's get into market action. So I believe the market's down right now because the market was up yesterday. No, so, okay, let's go back in time. So Apple reported numbers, and those numbers were blockbuster. In fact, if you could take one earnings quarter and put it into the Hall of Fame of quarters, it was the Apple quarter yesterday. And what it showed was Tim Cook is really good at supply chain. Like, they didn't have a bump. In fact, if supply chain was perfect, they would have made an additional $5 billion on top of the $129 billion that they already made. And what most people, and the part that Wall Street really cheers about that is their gross margins were 48.3%. That's insane. That means that of every dollar of revenue, 48.3% was profit. And that gross margins, then you do taxes and stuff, right? But like, there's money after paying overhead. That's crazy. Because the thing is, when you're able to have margins that high and you're selling $120 billion worth of stuff, you would think that scale will bring your margins down because you're selling so much that how could it possibly be that everyone in the world is willing to pay twice what it costs you to make? Everyone's willing to do it. Well, that's Apple. That's the power of Apple. That's what's so strong about Apple. Apple conceivably could be its own country. And in fact, if Apple was a country, I'd move to Apple because it'd be the strongest country ever in the world. It would have the best balance sheet, it would have the best price. It would, honestly, Apple should buy an island and you would see the exodus across the country of people competing to go live in that island. That's Apple. Now, as the largest company in the market, one would say, well, look at that bellwether. If Apple is showing everyone that their fears are misplaced, look how good Apple did. Therefore, everyone else should do well. Well, in a pessimistic market, people come out and say, no, Apple did so well that they showed Apple is Apple. In fact, they did so well at the detriment of everyone else. In fact, their supply chain was so good because people take Apple's calls. They say, hey, listen, we're having supply problems, but we're not going to lose Apple as our customer. We're going to make sure they get everything first. So Apple didn't really feel the pinch because they're number one on everyone's call sheet. Therefore, one could say, no, Apple just took all the growth from everyone else and showed it in one company. They are not the tide lifting all boats. In fact, they're the outlier. In fact, the fact that they're doing so good is a danger to everyone else because it shows the belief that no one else could compete with them, and it's only one company. All right, so what does that mean? Well, that means sell everything else. It doesn't matter how good Apple did. Everything else is shit. Just throw it out the window. Okay? So what you see, what I suspect, is Apple's probably still up and the market's down. Okay, fine. But is that a little too pessimistic? Because, so when I was in college, there was a college quarterback. His name was Tim Tebow. He went to the University of Florida. He was my favorite quarterback ever, ever, ever. Because Tim Tebow was probably the best kind of person you could ever meet. And I've traveled to Florida to watch him play while he was in college. And his parents were, what are they called? People that travel the globe and do medical work. They were missionaries, right? So they would go to all the different countries and preach the word of God and do medical stuff and help local communities. And Tim would go with them every summer. That's how he grew up. In fact, he was a virgin. He publicly was a virgin and said he would never have sex till he got married because that was a sin. Like, he was that, like, you're too religious for me. Like, when I'm next to you, I'm the sinner. No matter who Tim's around, he's the angel and they're the sinner. But on top of that, his work ethic was second to none. In fact, in his book, which I read, he was doing arm curls, right? Like there was an arm curl contest and some of the boys behind him were way bigger than him. And he was like number 3 out of 7 people online. And the first person did like 20 and the second person did 25. And the expectation was Tim would do like 30 because you want to beat the person in front of you. And if you measure that across the board, well, then it seems conceivable that the last person knows how many he has to get, and he can go ahead and find the strength to muster to get to that point. It's easier to hit a target rather than hit a fictitious number, right? And Tim knew that. So Tim, in his unlimited competition, said, okay, and he did over 100 curls. And the point was he did a number that literally blew everyone else away, that no one even wanted to do it anymore. Nobody wanted to, everyone behind him was like, whoa, bro, like, I'm not going to waste my time getting 200. I don't even know if I could get 200. If I get 200, I don't know what my arm's going to feel like. I'm not doing it. And he won without the other people even participating. That was Tim Tebow. Now, when Tim Tebow was in college, every girl wanted to sleep with him because he was a virgin and they wanted to be the one to go ahead and sleep with Tim Tebow. But they couldn't. So you know what happened to everyone around Tim Tebow? Every one of his friends and his brothers, they were the Don Juans and Casanovas and Hugh Hefners of the University of Florida. Because they could not get to that one, anyone around that person, all the collateral companies, all the collateral people, all the second and third rate people got a lot of business. And that's how I look at Apple. Apple's Tim Tebow. Apple cannot be touched. They can do whatever they want. But to go ahead and say because Apple's doing so well that no one else could do well because everyone's competing for Apple is crazy. Because companies aren't going to stop doing business. If they can't go ahead and get an Apple chip, if they can't buy an Apple phone, if they can't compete with Apple, they're going to go to the next ring and the next ring and the next ring, which means, in our opinion, Apple is a bellwether. The fact that Apple's doing so well, it really does lift all ships. Maybe it doesn't lift them this quarter, but going forward, which is what everyone invests for, if Apple's doing this well, then it's conceivable to say at some point, others are going to do well around them, right? So, oh my God, Apple's making, everyone wants to buy an Apple computer, even they can't produce all those computers. All right, well, Microsoft could produce a computer. Everyone wants to buy an Apple chip, but even Apple can't do all those chips. Well, other people will make a chip, right? So it's conceivable that you want to be an Apple, but there's a law of large numbers. It's a scale. And now when Apple's doing 48% margins, remember this, right? Those margins are so high. They're literally in people's faces, charging them twice. They're telling them, this cost me $5, I'm giving it to you for $10 and you're going to take it and you're going to like it. And people are saying, well, you're Apple. Like, of course I'm going to take it and like it. You're that great. Well, do we believe that other companies can't compete on price? Right? So say Apple's product is rated at 10 and someone else's company's product is rated at 9 and Apple's selling it for $10 and the other person at 9 is selling it for only $7. What product is going to be bought? There's an elasticity. There's a Laffer curve to all this. Other companies, there's a saying in football, the other team has coaches too. This will permeate to everyone else. Every other company now, like in football, say for instance, there's a team doing really, really well. Well, now all of their assistant coaches get jobs at other teams as head coaches because apparently they know the secrets. Right? Like they did so well that they know the secrets and they can share it with other people. So to go ahead and say, all right, Apple is the only thing that will ever exist and no other company can ever do anything. And this quarter proves that everyone else is garbage and SHIT should be thrown out a window, discounts exactly what's going to happen. That executives of Apple will be hired at other companies, that other companies will go ahead and increase their technology, that other companies will continue innovating, that other companies will lower prices. And they'll force Apple to lower prices. So if the market's saying, well, if everyone lowers prices, profits go down, fine. But if prices go down, but volumes go up for every other company other than Apple, what happens to the market when every company has more profits and only one has less profits, right? The point of the story is one could make an argument with pure logic that to go ahead and sell the NASDAQ on Apple's numbers is completely cuckoo for Cocoa Puffs. If you wanted to do that a month ago, obviously that was a good idea. If you want to do that today, I think it's a bad idea. I won't know if it's a bad idea until a month from now, but I think it's a bad idea. So when it comes down to timing, well, what makes you think it would be a bad idea now? Do you know January is the worst month for the NASDAQ since 2008? Like the financial crisis. It actually gets worse than that, because that was true earlier in the week. The NASDAQ right now is having the worst advanced decline. Now, advanced is the companies that go up and decline is the companies that go down. The worst advanced decline volume since 20 years. Okay, 20 years. And what happened 20 years ago? Well, do you remember this thing called the tech bubble that crashed in, January 2022? That's what we're talking about. January 2002. Right now, the NASDAQ is experiencing the worst stretch since the tech crash. Now, I don't know when the last time you looked at a chart, and maybe we'll have some fun and look at charts today. But there was never a worse time for the NASDAQ since that crash, ever. In fact, Amazon went down 97%. Well, Amazon's a pretty big company right now. It would have behooved you to buy it down 97%, right? What's it down now? 10, 20%, something like that. Okay. So what are we saying? So it seems like we can't call the bottom. Do I think the NASDAQ bottoms? I've been thinking it's going to bottom. I've been thinking this week is the low of the NASDAQ. Now I'm starting to think maybe early next week will be the low point. But do I know that for a fact? No. But do I believe that if one was so inclined and had the cojones to go ahead and step in and say, all right, enough's enough. I will buy some of this right now. That a year from now, they won't be like the smartest people in any room they're in. Oh my God. I don't even think that's a debate. And you know why I know that? Because today I was thinking about just selling everything. Because the other side of the argument is, if a company reports the best quarter in the history of the world, and it still goes down, what other good news is there, right? Like we've talked about that. If they're able to perform the best, what other good news is there? And it's funny because now you're looking at two different dichotomies, right? Two different behavioral science things. Well, if this is the best it could do, and it's still going down, it's telling you that there's no one left to buy. But if that happens, then everyone that's already sold and already seen it go down clearly says, no, that's not true. There is people to buy. The stock was 180, it's now 160. There's plenty of people to buy. Therefore, that whole, the best quarter and it's going down, there's no one left to buy is actually phooey. But because that message makes sense, people say, all right, that's it, I'm throwing in the towel. Because they just had the best quarter ever and the stock was up 8, it was up 4 or 5 this morning. Who knows where it is now? And that's what I thought this morning. I was like, you know what? Maybe this thing just crashes. The CDS, credit default swap spreads are moving up. This is going. And it brings me back to what my original thought was, because you have to keep yourself logical. Do not give in to emotion. Our original macro thesis was that the Fed can never raise rates and that they were going to have to manipulate the market through their verbiage of threats of rate hikes to lower the asset prices, therefore lowering the wealth effect of the nation, therefore lowering the inflation rate without ever having to raise rates. That was our premise. And if that's the case, it's like, can you blame them, right? Like, for instance, if someone does something that helps you, and the only way they were able to do it was by making you hate them, do you hate them after you've accomplished your goal, right? Like, say, for instance, you're training at the gym and your trainer tells you you're a fat slob every day, that you're the biggest loser, and he parades, pretty girls around you or pretty boys or whatever, and literally just makes you hate your life, just makes you hate everything about it. and you come into that gym every day and say, I'm going to show him. And every day he abuses you and abuses you. And after a year, you're like, oh my God. And then you go ahead into a boxing ring or something and you win the gold. You win the crown. You're the best boxer. It's very easy to say, no, I'm the best boxer because I hated my effing trainer. He was the worst. He would abuse me and I got through it. But would you have ever been the best boxer if not for him, right? And that's how you have to look at the Fed Reserve rate. You cannot have inflation come down unless everyone truly hates you and thinks you're going to raise rates. Therefore, if you're going to keep that mantra, you can't step back. You got to keep slamming stuff. You can't come off the gas. You got to be, no, we're doing this. We're doing this. And everyone hates you. In fact, everyone hates you so much that they're scared to buy stocks. In fact, they're leaving their money in their accounts. They're not spending in the economy because they don't know what's going to happen with their wealth. They don't know what's going to happen with their home prices. They don't know what's going to happen with their stock price. They don't know what's going to happen with their retirement portfolios. They're not spending money on anything. Therefore, the supply chain automatically corrects itself because now the demand gets pulled out while the supply chain's moving. You know what happens in the supply chain? The pendulum goes past it and it becomes a supply glut. Do you know what happens to prices in a supply glut with reduced demand in an environment where the wealth effect has been cut in half? There's no such thing as deflation in that environment. That's called deflation. Prices are actually coming down. So if the Fed wanted to do that, right, how would that look? And it would look like this. It would look exactly like this. And if that's the case, then you know everything in front of you is just hocus pocus. Because everything that the market is fearing is never actually going to happen. Therefore, if you're smart enough to know that and have the vision to believe that, then this is the time that you would expand on that and you would use it and you would leverage it, right? So that's why I say to buy stocks at this point is such an easy decision. Easy peasy. Easy peasy. And yet, like I was just going to say, I'm going to put all of my money in stocks, but I won't do it. Why? Because I'm still kind of scared a little bit. And that's exactly what they do. They still, even me knowing that, I'm still scared to put all my money in stocks. Because one would say, and you know what, put your whole net worth in the stock market. Then why not? If you don't need it for a year, do it. I wouldn't do it because I'm scared. That's exactly what's, I need to see the market move up a little bit. I need to feel a little bit of comfort. I'll pay higher prices if I knew there was a base underneath it. If I knew that the selling was done, I would pay higher prices. Now listen to that sentence. I would pay higher prices. Everyone would pay higher prices. Therefore, once this happens, once this base is stable, the prices then go up because everyone's willing to pay higher prices. They just want to know that it's going to go higher. It's like when you're betting on a sports team. All right, Michael Jordan's going to win this game, but you have to put $1,000 up to win only 100 because everyone knows Michael Jordan's going to win. My wife constantly looks at me and goes, "And who would do that?" I go, "I would," because it doesn't matter the rate of return. It's, do I get a return and do I get my original investment back, right? Like I would prefer to make a bet that I have a 100% certainty. No, nothing's 100%. But I have a 95% certainty that I'm going to get my $100 back and I'll make a couple of bucks on it, whatever. Then a 50% certainty I'll get my $100 back and 100 on top of it. I'd rather the certainty of knowing I'm not going to lose. That's just me. That's why stocks go up. Once they start going up, they keep going up. And people say, hey, it's going up. It's too high right now. No, because people have the certainty it's going to go higher. It becomes a greater fool theory. It starts off with the wall of worry, then let's get in, then, oh my God, it's going. Is this the right time? It's going, it's going, it's going, it's going. It's too high, it's higher, it's too high, it's higher. It'll never go down, crash. That's what the market looks like. Right now, we're here. We were here, we crashed, and now we're here. So you know it's going to be here. So does it matter if you buy here, here, or here? No, it doesn't. So this is what you do. You hold your nose, you go on and you go like this. And you shut your computer and you walk away. Walk away for the next week. Don't even look at the stocks again. So let's see where the market's at today. We have our Etsy calls that we purchased yesterday. So let's talk about that for a second. So we said at 355, which is actually 357. Sorry about that. And we were going to make a decision on whether we were going to hold our Apple calls or not. And we said that decision was going to be based on the Apple price, that if it was under 162.5, we were going to sell it before earnings because we own the 165s. And because our cost on it was like $5 or $4, our break even was the stock going to 168, 169. And at the end of the day, the stock was 159. But we were able to sell for $3.50. Now we took a loss, I think like 40, 45% loss in that position. Mind you, we made 50% on the Apple position before, right? Like, so it all evens out somewhere down the road. So we sold it for $3.50. Now that $3.50 presumes that the people that bought it from us believe that the stock was going to get to 168.5 because 165 was a strike plus 3.5, which is their cost basis because that's what they paid me, equals 168.5. Now, I didn't believe the stock was going to go up 9 points. So I said, you know what, I'll sell it. But if the stock has good numbers, I do believe it's going to go ahead and start bringing people back into the NASDAQ. Therefore, if I can buy a NASDAQ stock that's severely beaten down in a 22 red and green that I like Etsy, well, then it's a win-win. If Apple does well and the NASDAQ goes up, Etsy's in the NASDAQ, it'll go up. If Apple doesn't do well, I don't lose my entire investment because remember, the options expired today. They went to $0. So you could say, oh, I don't want to take a 40% loss, but you don't have a choice anymore. You either man up and take your loss, or the market will give you a loss of 100%. And there's no nobility in allowing the market to give you 100% loss. 0. So we said, all right, let's take the loss and let's put it into Etsy. It's a month out, and that was our calculus, right? So we own Etsy. All right, so let's take a look at the market to see where we are. Who knows? Maybe we're down $1 bazillion, maybe not. But let's see. Okay, share screen. All right, Zoom, leave me alone. Okay. Let's move this stuff. The market's down 141. Okay. Now, where did it start? All right, so let's go over here. Let's go to the QQQs and see what happened today. Look at the QQQs. The entire index is 11 red and green. Guys, do you know how difficult? The entire index, the whole NASDAQ, is now double-digit red and green. That's insane. Okay, so let's see where we're at. Right. So the market's been open for 57 minutes. Let's do 5-minute bars. Okay. So presumably this is where we opened, right? Okay, this is 9:30. So at 9:30, we got as high as 343 on the NASDAQ, and presumably because Apple probably opened up really high, right? Okay. Woo, what a sell-off. Sold always down to 338. Now look, it's completely, well, not completely, but mostly come back. Now it's pulling back a little bit. So what happens the rest of the day, right? Does it find its footing and go higher, or does it sell off? Well, I don't know. Let's find out. So if we take a look at half-hour bars, which we were doing yesterday. Now, do you remember these lines that we drew yesterday? All right, we hit the top, right? This is Wednesday. And then yesterday, what's this? 1 o'clock, we broke underneath the line. So this is why these lines are so important, right? Like, look what happens when we broke underneath it. We bumped our head on it, and then we've cascaded down ever since. The assumption now is that you would go ahead and retest this line or come close to it, meaning this area right here is the be-all and end-all of the NASDAQ. So if we go ahead and do not go under 334, we're good. All systems ahead. If we break under 234, then the market's pulling back a lot more. And that's the belief, right? Like that's what the charts say. Because that was the low Monday. We fought our way all the way, this is Monday, right? We fought our way all the ways back. If we then fought it back for no reason and give it all back, that's a problem. So this is super duper duper important. And it's our belief that the market's going to fight its way back. So let's go ahead and take a look at some volumes and all that other fun stuff, right? Let's take a look at the volatility. Okay. So what we can see, and let's pull an hour bar, because now we're at an hour for the day. Right? See, we just passed the hour. All right. So if we were looking at the NASDAQ, we would say up here, down here, volatility down. Okay. So right here, well, no, this volume is going down, right? Okay. So down price, down volume, volatility down. What does that mean? Exhaustion, right? The price is going down, but there's no one left that's really selling it and no one's fearful. So this would say, okay, it's time to buy. Like this is going to become exhausted because volume is real people. You cannot create new people out of thin air. So, and I know what you're saying. Well, Anthony, there's computers, there's this, there's that. Yeah, the volume takes that into account. There's been computers here, 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 and here. So these are all in comparison. All right. So we have price moving up here. We have volume moving up here. That's good. And we have volatility moving down still. That's like Goldilocks. Like you can own this. And look, you were able to own it. Did really, really well. And you were able to own it till when? Well, look what happened to the volume. No one was left to buy at those levels. But the volatility was still going down. And then boom, right? Now, the volatility going down would be a little misleading. Well, the volatility is going down and something bad happened. Shouldn't people have been able to sniff that out? Well, how many people would have sniffed it out? Just these people? Because the volatility is of the volume, right? Meaning there wasn't that many participants that believed this price. Meaning they were waiting for something. And the reason why you don't see this spike up crazily is because this was expected. They were waiting for something. Look how orderly this is. This isn't like zoom, 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 zoom. So what happens, right? So price goes down. But look at the volume. It's going down that whole time. There's no one left. Like at some point, everyone that's, okay, first you got to understand this. There is a point where everyone that could sold has sold. That is a true sentence. Now, once you know that sentence to be fact, you just have to know where you are and where that point is. That point could be 10 years from now, right? But there is a point. The whole game of what we're playing is where's that point? And we believe that point is getting closer. Okay, so you have stocks going down, volume going down, and volatility going down. Okay, so people are getting exhausted selling and people aren't scared. What's going on? All right. Price is still going down. Volume is picking up a little bit, right? Like, okay, well, I guess if it's going to go down, we should just keep going down with it. But volatility's doing what? It's not breaking out to new highs. It's like this was people scared. This is people kind of like, I don't really know what's going to happen next, but I believe the worst is behind. I can manage the rest. Remember, in the market, the scariest thing is uncertainty. If I know a stock's going to go down, or if I know it's going to go up, I can manage that. It's when stocks go up that I did not expect, or stocks go down that I didn't expect, and it's out of my control. Now I got to rejigger my portfolio, and I don't know what to do. See how volatile I just sounded? People know what's going on now. So if anything, I would say that this volume is going to start going up because people are going to start buying select stocks, right? So if we were to take a look at our super duper list, these would be the stocks that we would say are the ones that are going to be purchased. So NVIDIA, so let's pull a daily chart, right? Let's get rid of this. All right, so NVIDIA is a 12 red and green. So maybe not NVIDIA right away, but NVIDIA is, take a look at this company, right? Do you think all of a sudden NVIDIA just is no longer, do you see this chart? Do you think everyone just bought it by accident? NVIDIA is the #1 single greatest chip company in the whole world during a chip shortage. NVIDIA is the chips that are in the autonomous vehicles, the EV vehicles. NVIDIA is the chips that are in all of the different Bitcoin mining equipment. NVIDIA is the chips that are in all the different metaverse, interactive, Oculus, all the other nonsense. Now, of course, that's all exciting stuff. Oh my God. Well, I don't know about you, but I don't see an autonomous car on the street. I have never been to the metaverse. I see people having sex in the metaverse, and I see that, and I point here because I was watching it. I'm like, how is this even possible? You can buy equipment that you can strap to your genitals and then operate in the metaverse and actually interact with people and do things that the virtual reality sends a signal to the equipment you purchased, and you can actually live in the metaverse and be sexually gratified, right? That's happening in the real world. Not without an NVIDIA chip, it's not. I've never seen autonomous cars driving around. I don't own any Bitcoin mining equipment. These things are all what people perceive as the future. Therefore, it's very easy to get super excited about this. So you could make the argument that a lot of this was like, oh my God, the future, the future, the future. But how much fluff came out? This was a $346 stock. It's now $215. That's $120 off the stock price. That means the stock, oh, well, it's back where it was the end of last year. Okay, so one could make the argument, all right, it really went far over here, but look at all these people here. Do you think it's really going to crack through all these people? Do you think it's going to go back to before the metaverse was even an idea, before autonomous vehicles was really a good idea, before Bitcoin is like the be all and end all of everything? Do you think it's going to go back? Because I don't. And if I don't think that, I would think that it behooves a company, Upland, exactly. I would think it would behoove a portfolio manager to say, my clients pay me to have testicles. My clients pay me to have courage. I'm going to step in and have the courage to buy right here, because even if it goes down a little bit, I'm getting all of this for free and I know what the company does, right? That's what portfolio managers are doing right now, because all portfolio managers need to know is that the company's not going to zero and that the world's not going to SHIT. As long as that's the case, you could own stocks, right? So Microsoft, all right, look at this. Came all the ways down, came all the ways up, right? They had earnings. Oh, the earnings weren't as bad as we thought. Let's buy it. Apple. Oh my God, look how bad this is. Remember these lines we drew? Remember we said if it breaks this line yesterday? I mean, guys, we were on this call yesterday. We drew the line. At the time, it was over here. We said, if it breaks out this line, it's going to break out. Do you think this is by coincidence? There it is. Boom. Tesla. Oh my God, they stink. Their earnings were terrible. Oh my God. Well, it got down to 792 today. It's now 837. A lot of people are saying, I'll step in there. Etsy. 23, I don't see a red, but 22 red and green. And maybe this will turn red by the end of the day. I don't know. But have I ever lost money? Ever in the history of Anthony ever doing anything? Lost money with a 22 red and green? Zero. Now, maybe this will be the first time. I don't know. But I don't think it's going to be. Netflix. Bill Ackman, one of the best investors of all time. He actually called the 2008 stock market crash. He actually called the bottom of March 2020 COVID. That's when he bought. One of the best investors of all time. Stepped in right here and bought 3.1 million shares of Netflix. He's one of the top 20 holders in this company right now. Do you think he did it because he's dumb? No, he said, all right, buddy, bet. I'll go ahead and buy right here. Now, Netflix is at the lows of the day, but 22 red and green. Who here wouldn't want to buy a 22 red and green? That's the #1 streaming service in the entire globe. I don't know, but I can tell you that if you bought it here a year from now, I think you'll be quite happy. Do I know it's going to be higher or lower tomorrow? No, but I can tell you right now, a year from now, you're going to be quite happy. And I would say that and bet my life on it, right? Lululemon, every girl's favorite yoga wear. In fact, this company purchased the mirror. You know the mirror that you see on the ads that actually has an interactive personal trainer? They own it. Have you ever went into a mall? Have you ever walked into Lululemon? Go walk in, I dare you. You will walk in and you will feel the same feeling you feel at Starbucks and Apple. This is a community. This is an ecosystem. This is people that no matter what, they are not giving up this product. I bought my wife Lululemon pants for Mother's Day. Every time we go out and she's like, oh, we're going to be like around people. Let me go put my Lulus on. That's Lululemon. All right. 20 red and green. Well, not red, 19 red and green. Where was this stock? Okay. Whoa, look at that. Now, let me guess. Everyone here just had no idea what they were doing. In fact, this is going to crash all the way back to here, right? You should sell it here because the company's just going to go back to what? The depths of COVID, right? Or maybe, you know what? Maybe it has another 40 points down. Let's say the worst case scenario, it goes 40 points down. Have you ever been to Lululemon, the corporate office? I haven't, but I don't think they're at the corporate office saying, guys, let's change the way we're doing business. Let's change the way we make these clothes. Let's change everything because our stock's down. No, they're doing exactly what they're doing. They're doing bigger. They're doing better. In fact, all of these people knew the growth rate going forward. The stock just got annihilated because everything got sold off because the Fed said, hey, listen, we have this inflation problem because we're a bunch of dirtbags and we just print money left and right and we can't raise rates because we owe a ton of money. So we're going to take that money out of your pocket and we're going to crash the stock market. But you either know that and react to it, or you run from it and you get scared from it. But Lululemon, I love it. Let's see the last time the red and green were that high. Over here, okay, boom. Over here, okay, boom. Over here, what do you think is going to happen, right? So I don't know. What do I know? But I know more times than not, if you go ahead and take really, really high probability calculated risk, you're going to do well because the stock market is up 90% of the time. And I know it doesn't feel like that, but go take a look at a chart of the stock market from 1900 to now, and you know what you'll see? Whoop! Because that's America. This is the biggest and best companies in the best country in the entire globe, even with the president that we have, right? Even he can't mess it up that bad. Manpower, I don't know what this company does. 21 red and green though? I'll buy it. Intuit, can you do your taxes without this company? Chipotle, have you ever walked into a Chipotle? I can promise you, no matter when you walk into it, you're getting online. In fact, I would bet you right now that if you walk into Chipotle at 10:40 a.m., there's a line. So am I going to run from this company? Let's go take a look at it. Okay. So Chipotle, cool, yay, woohoo, la la la. Oh my God, look at this red and green and this 12, right? What do we see, 12? Oh, this is a bad time. Whoop. All right. Red and green. Was that 20? Am I going to run from this? Do I think Chipotle is going to lose all these customers? Do I think Chipotle is, it's impossible to believe that. And I guess if you want to believe it, you can, right? But the point is, once you take Armageddon off the table, you're left to just identify companies on their own merits. Oh my God, there's inflation. Chipotle has food. The food prices, they're not, their margins are going to get hit. Anthony, what are you doing? All right. Their margins are going to get hit because they can't afford the food prices. They paid $10 for beef. Now they're paying $20 for beef. You know that line I told you about in Chipotle? Chipotle right now could tell all of their customers that prices are increasing $2 to $3, and that line will stay exactly the same. It'll just stay the same. No one is leaving Chipotle. Okay, what other stocks do we have here? And of course, you could, obviously you get the point, right? So does this list look like Armageddon? All right, 1%, 0%, up almost 4, up a half, down less than 1, down less than 3, down less than 1, down 2, down 1, up 1. Okay, where's the stock market? Look at the stock market, down 280. NASDAQ, but look at the NASDAQ, down 0.26%. Is this not the first time the NASDAQ's down less than, all right, so let's do another game. I love games, guys. We're having so much fun together. I'm gonna miss you guys. Because our bootcamp ends today. We do this every Monday, but we can't do it all week, every week. Although I could be convinced to, because I really do enjoy this. Same percent. Okay, so let's do something, right? Let's get rid of these arrows. Let's just clean this up a little bit. Okay, so what do we got here? So let's do it right when so this is the NASDAQ and the S&P. The orange line is the NASDAQ, right? Right. So what you can see is they're about the same, and then the NASDAQ just goes haywire, right? So the NASDAQ's down 12% since, when is this? December. Well, the S&P is down 7%. So we can yes, please, you're great, Amy. So we can very easily see that the Nasdaq's down a lot more than the S&P, that the S&P is being dragged down by the Nasdaq. Okay. So we can see it, we can see it, we can see it. All right, hold on. Let's see if we can see it super micro. Now, this is a 5-minute chart, right? You can see since, what's this date? Since January 27th, that the S&P and the QQQs are actually identical. They have the same rate of return, even though the S&P is outperforming the Nasdaq by 500 basis points, 5% since December. So what happened? Well, the S&P is being dragged down, like it's finally giving it up, and/or the Nasdaq's finally finding some buying underneath it. All right, so let's continue. Remember, there's a 5-minute bar. Is this the first time we see the Nasdaq outperforming? So when is this? So the 27th is yesterday at 1435 is what? 235. So since 2:30 yesterday, the Nasdaq's now outperforming the stock market. Okay, well, Anthony, that's like less than a day. What does that mean? Okay. So as of, let's see. So as of what? This morning, 10:30, the Nasdaq's actually up since that time, and the S&P is down, right? So the Nasdaq is now leading. The Nasdaq's saying, hey guys, listen, I get it. We suck. We tore you down. We dragged you, but we're really trying to get our SHIT together. And if we do, are you with us? And the S&P's like, yo, bet, like, I'll be with you. Like, let's do this. Like, enough. Welcome to the party. Thank you, right? Now, that's a really cute story, Ant, but how can we actually see that anywhere? Well, what's the biggest Nasdaq company, right? Apple. Okay. Woo! So Apple opened up and got sold off because all the suckers were like, oh my God, the market's going down. Apple, they had the best numbers and they had the best numbers and they had the best numbers and they're going down. Where did it go down to? This is so important. Do you see that line? Guys, were we on this morning when this opened up? No. This line was drawn yesterday. Remember we drew that line? And remember we said technicians in the markets all agree upon reference points, that they don't talk to each other, but they have reference points. Everyone on Wall Street has this line because everyone that knows about it drew it, which meant people had buy orders. They said, if it hits this line, I'm good with Apple here. If these suckers want to sell it to me, I don't want it to go any lower than that. I'll take it right there and I'll defend that line. If it goes lower, fine. But I'm buying there. And then someone else is like, I'm buying there. And someone else is like, I'm buying there. Then someone else is like, I'm buying there. And that's why these lines have this volume. And look, it hit the line, went up. Oh, suckers, hit the line again. And the people that missed it here are like, I'll buy it there. Boom. Now, the reason why that's so important is it shows you behavior. There is big money that is now actively looking for their price points. They're actively looking where they can buy a stock. So Apple looks like it might go up the rest of the day. It looks like it might drag the Nasdaq up with it. So let's take a look at where the Nasdaq is today. Let's get rid of the comparison, right? Okay, cool. So Microsoft, where did it open, right? So where's the opening? Okay, so here's the opening. Oh my God, it went down. Look, now it's moving. Tesla. Oh my God, it went down. Now it's moving. Etsy. Oh my God, it went down. Now it's moving. Netflix. Oh my God, now it's moving. Lululemon. Oh my God, it went down. Now it's moving. And I could probably say that 10 more times, right? I could probably even say that to Chipotle. Oh my God, it went down. Now, ooh, look at that's really moving, right? So people are starting to step in. The video, remember we were talking about that? How long ago? Look at the move ever since then. So we have our Etsy calls. We're pleased with it. In fact, what we're going to do is not, can we do this on the daily? It's fun, right? Can we? How about this? I'll make you a deal. I will do this on the daily if everyone commits to inviting friends to join. So if everyone could commit to sending an email to like 10 people, 20 people, 30 people to enter into our ecosystem, I will continue doing this. Because also, as you guys know, we send out the emails for Rhino. Rhino is the most important thing we're doing. That is our search engine. And we're looking for different entry points that someone could learn Rhino and say, oh, like it's conceivable that someone could be watching this and say, wow, this is really good. That Anthony, he's actually quite impressive. If he does this with this, I would like to be part of other stuff he does. So I'll do that. I'll do this again all next week. Let's see where we are. I'm going to give some guidance, not guidance. That sounds way too formal, but I know what I'll do. Saturday, tomorrow, I'll send out an email in the morning with our complete replays of our entire boot camp with a message to please join us. And that email will be designed so that you can then take it and forward it to others. Yeah, I'll do that. So I'm committing, you're committing. All right, we're doing this all next week. Well, look at Etsy up 2 points. It's almost like who could have thunk it, right? All right, so we have it on a weekly, yuck. We have Etsy on a daily, 23. We've never lost money on a 23, so we're quite happy with it. Oh, come on. Anyway, so it is 10:51. Let me just take a look at the chat function. So before we go into the chat function, what I'm planning on doing is not touching anything. Actually, when does Etsy report earnings? Oh, March 1st. We have the February calls. I think they expire February 22nd, I think. Oh, man, I should have done them for March. Now, whatever. Because I would like to have Etsy earnings. But I really do believe by then this is going to be up. All right, so then let's get together all next week. I will see everyone Monday. I will send out that email tomorrow. Let me look at the chat real quick, see what's going on in here. If anyone's saying anything, please, can we do daily? What are the ones you hold long-term? I commit, which one's long-term? So Deborah, for long-term, I would say Apple, definitely. I would say NVIDIA is a really good one. Lululemon, I love. Chipotle, I love. Actually, so you know what? Obviously, yes. But Monday, what I'll do is let's build an ideal long-term portfolio. If I was making a portfolio Monday that I wanted to hold for the next 5 years, what would be in it? Actually, I think that's really good. So I'll put that in the email as well, because that's going to be a really valuable day. So I'll spend the time putting together a 10-stock, 5-year long-term portfolio if I was buying Monday. I think that's cool. So I'm going to really try to market that Saturday in the email. We're going to send that to everyone. But please, I can't tell if you actually do it or not, but Rhino is a culture, and I believe in you. So please just go ahead and forward it to some friends and family, post it, put the link in your Facebooks, your chats, your different places. We don't charge anyone. And we do that because we want to help everyone. And I don't like saying help, because people don't need help. They just need a fair shot. And if we can share education, people can make their own decisions. So we're looking to share education. All right, so I think that's it. Guys, I totally love you. Have so much fun. Look out for the email tomorrow. And anyone that bought Apple calls last night, you are looking sexy. Ravi, I don't know your strike. You don't need to share it, but I know Ravi bought it right at the close. So Ravi, if anyone knows him, lunch is on him. Thanks, guys. Love you so much. Bye.